Welcome back. You're watching us here on Bazaar Morning Call. This morning we're looking at a 110-point downtick at the open itself. Now it's accelerated a little bit to 122. Nothing really to worry about if you compare it with the rout that we saw on Wall Street overnight and the decline that we've seen generally from our peak itself. Siddharth Khemka of Motilal Oswal Financial Services joins us now. Siddharth, good morning. The banking pack has been relatively resilient, had led the outperformance yesterday as well. And we have an update coming in from HDFC Bank. What do you make of the fourth quarter update, and do you believe that the better days are ahead for that index heavyweight?
Good morning. Glad to be on the show. So I think overall banking is kind of insulated from this global volatility. That is also helping. Plus, we have the domestic liquidity measures taken by RBI, the interest rate cut cycle beginning. That is also kind of supportive to the entire banking as well as the financial services sector. To their credit, I think some of the bank business updates have come out to be very strong compared to what we were expecting, and that is also kind of helping in this environment. On its own, I think HDFC Bank, good steady numbers, and I would specifically point out to the deposits growth at 14% last few quarters. That was one area where a lot of concerns were there in terms of whether after the merger with the large balance sheet size, they will be able to get those kind of deposits, and CD ratio, how they had gone up. And with the 14% deposits growth, I think CD ratio has also declined almost 177 basis points on a sequential basis. Advances pretty steady and stable at 5.4% growth. So I think overall strong business growth, CASA ratio improved for HDFC Bank, and with the stock price remaining in a consolidative mode, I think valuations also looks good. So pretty positive on HDFC Bank from here on.
Pretty positive from HDFC Bank from here on. IT, Siddharth, the index sold off like there were special tariffs on it yesterday. The index ended 4% lower, but understandable, right? I mean, if the worry is US big time, and look at how the US market traded last night, almost as if anticipating like a sharp slowdown, even the R word. What is your sense from here? It was, by the way, not just Infi and TCS and HCL Tech, even Coforge was down 9%, Persistent was down 8-9%, index was down 4%.
So yeah, I think Prashant, while there's no first order impact on the IT space because the services have not been included in the reciprocal tariffs, I think there's a big second order impact on the tech companies, the discretionary spends, which were expected to pick up this year, and we all were hoping that in the month of Jan that this year could see an exports recovery as a key theme. Somehow that's not playing out, and there's a lot of, you can say, unclarity or no clear visibility in terms of growth from some of these key regions. What will also happen is that not only US, but some of the other regions, the developed regions, Europe, some of the other economies where Indian IT services have a big business, economic slowdown could be a big challenge, and that could lead to cuts in discretionary spending and hurt the Indian IT companies. And I think valuation for, especially for some of the mid-cap companies, the growth had been pretty strong, and hence valuations were on the higher side, something like a Persistent, Coforge, which used to be our top pick. I think at this juncture, it definitely remains better to stay away from IT because clarity is not there in terms of growth. And I think post Q4 numbers, we'll see a lot of companies cutting down on their FY26 guidance. That could even hurt more when that happens.
Siddharth, capital market stocks in focus once again. Our colleague Vamakshi was telling us that Angel One's update, again, just the number of client additions, it's all slowed down. What's your sense? And now the market's a bit wobbly. What would you do with a stock like, say, Angel One or even BSE? BSE has gone through a huge amount of volatility on this whole weekly expiry issue.
think should be yes. Capital markets are closely linked to the stock market direction, and with markets being that wobbly, I think the pace of new client addition that has definitely slowed down. The cash market transactions, the ADTOs that have also come down on a sequential basis. I think with the market being consolidated, these sectors will remain in a consolidation mode. From the space, I think there are two segments which looks really attractive. As you rightly asked, BSE, with the regulators giving out that they would unable to move their expiries to Mondays. That was a big overhang for BSE, which has its expiry on Tuesday. And I think with the exchange giving clearly out that there can be only 2 days which would be earmarked for weekly expiries, Tuesdays and Thursdays. That definitely leaves some room for BSE to gain market share. And the other segment being the mutual fund industry, despite all this volatility in the last few quarters, we have just seen marginally dip in the number of monthly SIP data. I think that is another space which so far looks resilient. The overall view is that the sector could remain in a consolidation mode given the market volatility. And B, within that space, we like A, BSE, and B, from the mutual fund space, we like HDFC, AMC, which has been consistently delivering in terms of profitability growth. And we also like TAMS.
All right. And what about Mazagon Dock? The government is selling some stake. There is an OFS. It's likely to open lower because of the supply. But on Mazagon Dock and a lot of these defense plays, do you believe that the correction is an entry opportunity? Because orders we've seen over the last month or so pick up.
Definitely, Mangalam. I think we are structurally positive on the overall defense space. And last month of the financial year, we saw hordes of the bulk of ordering activity because the government had to reach and achieve the full year order target. So that definitely gives a lot of visibility in terms of the order book and revenue visibility for the defense players. Within the defense space, what we like the market leaders in the separate sub-segments. So within the electronics space, Bharat Electronics would be a preferred pick. We see a steady 25-30% earnings growth, valuation being very comfortable. With the aviation, we like HAL, which is again a market leader. And in the shipyards or the naval defense companies, I think Mazagon Dock has a very strong order book visibility. Valuations definitely look attractive. And we believe that in the current geopolitical environment, India stands out clearly, not only from a domestic demand, but from a global exports perspective as well. With Europe slated to increase their defense spending, a lot of the Indian defense players will benefit from the increased demand. And I think any decline would be an opportunity to buy into some of these large defense names.
Okay. All right, Siddharth, we'll leave it on that note for this morning. Thank you so much for joining in. You have a good trading session ahead.